I say, let's start with you, Ed. I say that the optimistic feeling on the market is outweighing the negative feelings at this point. What say you, Ed?
Again, absolutely correct. I mean, right now, this market is priced for perfection. And if things don't turn out to, based on what we have planned in terms of Dodd-Frank reform, Obamacare, and tax reform, we will start to see things come back. But the public and the institutional investors still believe this is going to happen. That's why we haven't seen this, 10 or 15% sell-off based on this delay.
Steve Cortes, I would have thought that all the negative publicity surrounding the CBO report on the Ryan Obamacare plan, I would have thought that would be enough to take the market down a little bit this morning. But it appears the market's kind of shrugging it off, mostly. What say you?
Right, Stuart, I think it is. I think you opened your show by mentioning that wonderful Gallup poll showing small business, how optimistic small business owners are, and that confirms what we saw earlier from the National Federation of Independent Business. We see it in consumer confidence surveys. So I think the optimism out there is palpable. You wouldn't know it if you only pay attention to mainstream media, and if you only read their headlines, which are all about the gnashing of teeth in Washington, D.C. But if you talk to real people on the ground, workers and investors, I think they believe that we are going to get this legislation through and that we can have a new era of growth and productivity in this country.
I want to show you that small business indicator. It's the Wells Fargo Gallup Index, and it shows the biggest jump in optimism in many years. Small business has not been, I'm going to call it bullish, in at least a decade. James, you've been on this story all along.
Well, and Steve said it, same thing we've seen in the NFIB data, but now the president has got to deliver. Because these stocks are not cheap. You look at relative to their earnings, as we've discussed, people are expecting much faster economic growth than we saw in the Obama years, and now he's got to get the tax and the regulatory changes done that he's promised.
He's got to do it. It's a show-me market, basically, isn't it? Lizzie?
So does that $3 trillion that we've seen in the run-up in equity value mean that's what was held back under the Obama years, all those 8 years?
Well, it's a good question.
Is that the flip side to it?
I don't have an answer to that, but you're right to raise the issue of $3 trillion in extra wealth since November the 8th.
That's right.
That's good for the country.
That's what the Obama policies held back.
Yes,
right?
sorry,
I think to that point, too, a lot of that money is coming out of bonds. So what we've seen is a massive asset allocation shift. Interest rates have gone up precipitously since Trump took office, and sometimes historically that's not a good thing. In this case, I think it's an incredibly good thing because we had nearly a decade where interest rates barely moved because nobody believed that we could grow, and that started changing a little bit before the election. It accelerated then after the election. So we've seen a massive shift of capital, though, from the safety of bonds into the riskier and the more optimistic, more forward-looking investment of equity.
That is interesting about interest rates. We've got the 10-year Treasury yield at the highest level in a couple of years, 2.62%, I think it is now. And the Federal Reserve probably going to raise interest rates maybe 3 times, could be 4 this year. But again, it's not collapsing the market.
Well, I think that is interesting when you look at kind of how durable this sentiment is at the moment, where the markets are now accepting multiple interest rate increases expected this year. I mean, it's very refreshing. We've gotten out of, maybe we hope, out of this era where the markets look to the Federal Reserve and money printing and low rates to drive stocks forward. Maybe we're transitioning into more of a real economy.
Not a Fed-driven market, it's an economy-driven market. That's very interesting.